Hey YouTube, what's happening? Chris here. Wanted to bring you all an update on something that I was studying, going over, and I want to share with you. This is a Japanese candlestick reversal pattern. It's a bullish reversal pattern, and what it's called is the piercing line. When it's a bullish reversal pattern, confirmation is suggested but not required. And what we're going to dig into today, guys, this is the bullish piercing pattern, and I'm going to be going through just a few things in my book with you, the characteristics of it, some of the rules about it. And this book is the Candlestick Charting Explained, Timeless Techniques in Trading Stocks and Futures by Gregory L. Morris, and it's probably one of the best candlestick books I've ever read or studied. I really like it. It's in-depth, it's thorough. So what I'm going to do is just break down basically what this book says, and this is one to definitely have in your toolbox. So the bullish piercing line, what you're going to see here, guys, it's going to be coming from a downtrend. So for this two candlestick pattern to happen, what needs to happen is that you have to be in a strong downtrend. And what you see here is a long bodied day in red. And then the next day what you have is a long-bodied green day, and the close of this candle is actually halfway in between this candle. You're looking for this close right here to be halfway or more into this other candle from the day before. And what my book ends up saying about this, and guys, this one you still want confirmation, in my opinion. Like, you would want to wait to see if we do have some bullish confirmation coming out of here. The commentary on this, my book says, the piercing line pattern is essentially the opposite of the dark cloud cover. This pattern occurs in a downtrending market and is a two-line or two-day pattern. The first day is a black day which supports the downtrend, and the second day is a long white day which opens at a new low and then closes above the midpoint of the preceding black day. So this also here, guys, this is a good point that I forgot to mention with you. So right here was the opening of this day, and then here was the close. This is where the price ended up getting to, that little wick. But what happened was this day here, we actually got pushed down farther, and you can see where the opening was right down here on this wick. And so we got pushed down still for this day, and we had such a recovery that we pushed back up to 50% of this long day black candle, which is very important. The rules of recognition, there's three here. It says the first day is a long black day continuing the downtrend. Number two, the second day is a white day which opens below the low of the previous day. That's low, not close. 3, the second day closes within but above the midpoint of the previous day's body. Scenario and psychology behind this pattern. So this is the breakdown of why this pattern happens, why you'll see this pattern happen in these candlestick charts. A long black body forms in a downtrend which maintains the bearishness. A gap to the downside on the next day's open further perpetuates the bearishness. However, the market rallies all day and closes much higher. In fact, the close is above the midpoint of the body of the long black day. This action causes concern to the bears, and a potential bottom has been made. Candlestick charting shows this action quite well, where standard bar charting would hardly discern it. And that's the power of candlestick charting. There's so much more visual than what the bar chart is, guys, and I love candlestick charting, looking at all these different formations and how these patterns break down in these reversals. It's incredible, and you can use them from the 5-minute chart all the way to the month chart. It's just something you really need to look at each one of these patterns. You know, there's probably even reversal patterns just in this book alone 200 or more. So, you know, there's something that you really want to have in your tool belt. I can't emphasize it enough. Next thing, pattern flexibility. The white real body should close more than halfway into the prior black body. If it didn't, you probably should wait for more bullish confirmation. So what it's saying is, say this candle here, as opposed to the close being up here, it was down in this area and it closed at this part of the candle, you would want to wait for even more confirmation before going through with this. The piercing pattern's white candlestick must rise more than halfway into the black candlestick's body. There are 3 additional candle patterns called the on neckline, in neckline, and thrusting line, and we're going to go over those at some point as well, which make the definition of the piercing line so straight. These 3 patterns are similar to the piercing line, but are classified as bearish continuation patterns since the second day doesn't rally nearly as much. The more penetration into the prior day's black body, the more likely it will be successful reversal. So if this close here was even up higher into this, guys, like at this area, it would show that's even more strength towards that a reversal is going to be taking place. That's something you want to pay attention to. I'm going to read that again quick. The more penetration into the prior day's black body, the more likely it will be a successful reversal pattern. Remember that, if it closes above the body of the previous day, it is not a piercing pattern, but a bullish engulfing pattern. Both days of the piercing pattern should be long days. The second day must close above the midpoint and below the open of the first day, with no exceptions. And the pattern breakdown, so this is a two-stick candlestick pattern. If it were made into one, this is the equivalent. My book says it basically is the same as a hammer candle. It has that type of strength. So imagine that these two here were put into one day, it would almost look like that bottom hammer candle. And it says related patterns. 3 patterns begin in the same way as the piercing line. However, they do not quite give the reversal signal that the piercing line does and are considered continuation patterns. And that was the on-neck line, guys, the in-neck line, the thrusting line. The bullish engulfing pattern is also an extension or more mature situation of the piercing line. So the bullish engulfing candle is basically the big brother to this pattern. It's even better. So a bullish engulfing pattern, this candle here would fully engulf this one. So your close would be up in here, guys, right in that area, and that would be even more significant to a move to the upside. But this bullish piercing pattern, this is a very strong pattern, and it's one that you want to have handy. And the opposite of that is the dark cloud cover, to where you'd be moving up, and then all of a sudden you're going to see this pattern in reverse at the top. And that's one I'll also do as well, the dark cloud cover. It's a very good one. It's been successful as well. And this piercing pattern, this is one that's very successful as well. You want to keep it in your tool belt, guys. So God bless you all. Take care. I hope you like what you heard here and you got some from it, and dig into it more yourself. That's the best thing that you can do is, take something like this and then dig into it for an hour on your own and really learn it and study it, so you'll have it for life. It's the best thing you can do, guys. Take care.